If you rely on Social Security, SSDI, or SSI, you need to see this immediately. Because February 1st falls on a Sunday, the Social Security Administration has pulled the trigger on early payments. For millions of you, your money has already started hitting bank accounts earlier than expected. In today's urgent update, we are revealing the exact deposit dates for the rest of the month. Whether your birthday falls at the beginning or the end of the month, your payday might not be when you think it is. We're breaking down the official 2026 calendar so you can plan your bills and groceries without any surprises. But that's not all. The headlines are screaming about a $2,000 stimulus or tariff rebate check. Is it actually happening this month? We've dug through the latest reports from Washington and the Treasury to give you the cold, hard truth about who is eligible and when, if ever, that money will arrive. Don't let the rumors confuse you. Get the facts right here. We're also covering the 2.8% COLA increase and how it's affecting your net pay after those new Medicare deductions. This is the information the big news outlets gloss over, but it's the information you need to survive this month. Don't miss out on your money. Smash that like button right now to help other seniors and beneficiaries find this critical update, and let's dive into the dates. Welcome back to the channel, everyone. We are officially moving into February 2026, and if you are among the millions of Americans who rely on Social Security, SSDI, or SSI, this is arguably the most important month of the year so far. We are now in the second month of the new cost of living adjustments, and for many of you, the transition hasn't been as smooth as promised. Between shifting payment dates due to the calendar and the confusing headlines regarding stimulus or rebate checks, there is a lot of noise out there. My goal today is to cut through that noise and give you the absolute facts so you can manage your household budget with confidence. We're going to talk about exactly when your money will hit your account, why your check might look a little smaller than you expected despite the raise, and we'll address those rumors about federal stimulus payments head-on. Let's start with the immediate news. The payment schedule. If you are a Supplemental Security Income, or SSI recipient, you probably noticed something different right at the end of January. Because February 1st, 2026 fell on a Sunday, the Social Security Administration followed its standard protocol of moving the payment forward to the nearest business day. This means your February SSI payment actually arrived on Friday, January 30th. It is critical to remember that this wasn't an extra check. It was your February money arriving early. If you've already spent those funds over the weekend, you need to be aware that your next SSI payment isn't scheduled until Friday, February 27th, which will be the advance payment for March. This creates a nearly 4-week gap, so please pace your spending carefully to ensure you can cover your end-of-month expenses. For those of you receiving Social Security Retirement or Disability Insurance, known as SSDI, the schedule follows the traditional Wednesday rotation based on your birth date. If your birthday falls between the 1st and the 10th of the month, your payment is scheduled for Wednesday, February 11th. For those with birthdays between the 11th and the 20th, mark your calendars for Wednesday, February 18th. And finally, if your birthday is between the 21st and the 31st, your funds will be deposited on Wednesday, February 25th. Now, there is one group that falls outside this birth date rule. If you began receiving benefits before May 1997, or if you receive both Social Security and SSI, your Social Security portion is paid on February 3rd. Since February 3rd is a Tuesday this year, there are no weekend delays for this group. You should see those funds right on time. Now, let's talk about the 2.8% COLA increase that went into effect last month. By now, most of you have seen the updated amount in your bank accounts. For the average retired worker, this increase added about $56 to the monthly check, bringing the average payment to roughly $2,071. For those on SSDI, the average increase was approximately $44, bringing the average monthly benefit to $1,630. While any extra money is a good thing, many of you have been reaching out to me saying your check didn't actually go up by that full 2.8%. There is a very specific reason for that: Medicare Part B premiums. For 2026, the standard Medicare Part B monthly premium jumped by $17.90, rising from $185 to $202.90. This is the first time in history the premium has crossed the $200 mark. Because these premiums are usually deducted directly from your Social Security check, that $17.90 hike effectively ate a significant chunk of your raise before you even saw it. It's a frustrating reality for many seniors and individuals with disabilities. When the government calculates the COLA, they look at the Consumer Price Index, which tracks the cost of things like gasoline and electronics. But as we know, healthcare costs for retirees often rise much faster than the price of a new television. This premium squeeze is why it might feel like you're falling behind, even when the government says you're getting a raise. In addition to the monthly premium, the Part B annual deductible has also increased to $283 for 2026. This means if you have doctor visits or outpatient procedures early in the year, you'll be paying more out of pocket before your coverage fully kicks in. Understanding these numbers is vital because it explains why your net pay, the money you actually get to spend, might feel tighter this month than it did at the end of last year. This brings us to the topic everyone is talking about: stimulus checks. I've seen the same thumbnails and headlines you have, claims that a $2,000 fourth stimulus or tariff rebate check is being mailed out to seniors this February. Let's look at the facts. Currently, there is no new federal stimulus check legislation that has been signed into law for a universal payout in February 2026. While there has been significant debate in Washington regarding tax reform and various rebate proposals under the new administration, those are largely tied to the 2025 tax filing season, which just opened on January 26th. What you might actually be seeing are state-level programs or specific tax credits. For example, some states are issuing property tax rebates or inflation relief payments to seniors this month. New Jersey, for instance, has its Stay NJ program, which begins issuing quarterly installments in February. Another thing people are confusing for stimulus is the Earned Income Tax Credit, EITC, and the Expanded Child Tax Credit. Because the IRS just started processing returns, those who file early in February might see their tax refunds by the end of the month. If you are a senior who worked part-time or has qualifying dependents, you could see a significant refund check, which might feel like a stimulus, but it is actually a return of your own overpaid taxes or a specific credit you earned. I want to urge you to be incredibly careful with your personal information right now. Scammers know that people are looking for extra money and are expecting updates from the Social Security Administration. If you receive a phone call, text, or email asking you to register for a stimulus check or verify your Social Security number to receive the COLA increase, hang up. The SSA will never call you out of the blue to ask for your number, and your COLA increase is applied automatically. You don't need to do anything to get it. As we move through February, keep an eye on your My Social Security online account. This is the fastest way to see your official benefit verification letter, which shows exactly how much is being deducted for Medicare and what your final payment will be. If your payment doesn't arrive on its scheduled Wednesday, the SSA recommends waiting at least 3 business days before calling them. Banks sometimes have internal delays, especially with the high volume of transfers happening at the start of the year. If you find yourself in a genuine financial emergency because of these payment gaps or the rising cost of Medicare, don't forget to look into the Medicare Savings Programs, MSPs. If your income is below certain limits, your state might actually pay your Medicare Part B premiums for you, which would effectively put that $202.90 back into your Social Security check every month. In summary, February is a month of adjustment. Your SSI arrived early, your Social Security retirement and disability checks are coming on their usual Wednesdays, and while the COLA increase is there, the Medicare hike is taking its toll. There is no magic federal stimulus check hitting bank accounts this week, but there are state programs and tax refunds that might provide some relief. Stay vigilant, stay informed, and always double-check the source of the news you're consuming. We are going to keep tracking every move from the Treasury and the Social Security Administration to make sure you have the most accurate information possible. Your financial security is too important to leave to rumors. Moving beyond the immediate dates, we have to look at the broader picture of what's happening with your benefits this year, because 2026 is shaping up to be a year of major administrative shifts. One of the biggest changes you might have noticed, or will notice soon, is the way the Treasury is handling physical payments. Under the Modernizing Payments Executive Order, the government has essentially moved to a 100% electronic mandate. If you are still waiting for a paper check to arrive in your mailbox, you are in a shrinking minority. The IRS and the Social Security Administration have been very clear. The era of the paper check is ending. They are pushing everyone toward direct deposit or the Direct Express debit card. Why does this matter for February? Because as the system transitions, those few remaining paper checks are seeing longer processing times. If you haven't made the switch yet, I strongly recommend doing it this month to avoid the mailbox watch anxiety that so many of you have commented about. I also want to touch on a very important and often misunderstood rule change for 2026 regarding the earnings test. I get a lot of questions from people who are 62, 63, or 64 and are still working part-time while receiving benefits. For 2026, the earnings limit has increased to $24,480. This is actually a good thing. It means you can earn a bit more from your job before the Social Security Administration starts withholding $1 from your benefits for every $2 you earn over that limit. If you reach your full retirement age in 2026, that limit jumps up significantly to $65,160. This is a crucial window for those of you trying to fight inflation by keeping a part-time job. Just remember, if you go over these limits, you must report it. The last thing you want is a notice of overpayment hitting your desk 6 months from now, demanding thousands of dollars back because you earned too much in the early part of the year. While we're talking about the government and your money, let's go deeper into the One Big Beautiful Bill that passed recently, as it contains a massive new tax break specifically for seniors. For the 2025 tax year, the ones you are filing right now in February, there is a new standard deduction of up to $6,000 for individuals aged 65 and older. This is a temporary measure designed to provide relief from the high cost of living we saw over the last 2 years. If your income is below $75,000 as a single filer or $150,000 as a married couple, this deduction could drastically reduce your tax bill or even increase your refund. When people talk about a stimulus or rebate this month, this tax break is often what they are actually referring to. It's not a separate check that just shows up. It's a benefit you claim on your tax return. If you haven't filed yet, make sure you or your tax preparer are looking for this specific $6,000 deduction. It's one of the most significant changes to senior tax law in decades. Now let's address the elephant in the room, the long-term health of the Social Security Trust Fund. You may have seen the headlines recently stating that these new tax breaks and the 2.8% COLA are speeding up the insolvency date. Some analysts are now pointing to late 2032 or early 2033 as the cliff. I know this sounds terrifying, but I want to offer some perspective. Insolvency does not mean the checks stop. It means the trust fund reserves are exhausted and the system would only be able to pay out what it collects in payroll taxes, which is still about 75% to 80% of scheduled benefits. However, history shows us that Congress typically waits until the 11th hour to act. In February 2026, we are seeing more town hall-style debates on this than ever before. There are proposals on the table to raise the taxable maximum income beyond the current $184,500, which would force higher earners to contribute more to the pot. This is a developing story that could affect how your benefits are taxed in the future, and I'll be here to break down every proposal as it becomes a reality. For my SSDI family, I haven't forgotten about you. There is a specific update regarding the Continuing Disability Reviews, or CDRs. The 2026 budget has allocated nearly $15 billion to the SSA to help clear the backlog of these reviews. This means if you haven't had a medical review in a few years, you are much more likely to receive a notice this year. Don't panic. This is a routine part of the program. The key is to keep your medical records up to date. The SSA is also trying to make this process easier by moving more of the documentation online through the My Social Security portal. If you receive a CDR notice, the best thing you can do is respond immediately. Delays in response are the #1 reason benefits get suspended, and in a month like February where every penny counts, you cannot afford a lapse in coverage. Finally, I want to leave you with a bit of inside baseball on how to get help when you need it. The Commissioner of Social Security recently announced a goal to reduce wait times on the 800 number to an average of 12 minutes. While that's an improvement from the 20-plus minute waits we've seen, the golden hour to call is still early Tuesday or Wednesday morning, right when they open at 8 a.m. local time. If you're calling about a missing February check, remember the 3-day rule I mentioned earlier. Banks are processing millions of these transactions simultaneously, and sometimes the pending status doesn't clear until 24 hours after the official deposit date. February 2026 is a month of high stakes. You've got early SSI payments, a record-high Medicare premium, and a major new tax break to navigate. It's a lot to handle on a fixed income, but by staying ahead of the dates and understanding the why behind your check amount, you can take control of your finances. We are going to keep monitoring the Treasury's Trump accounts announcements and any movement on a true federal stimulus. But for now, your best bet is to maximize the benefits you already have and stay vigilant against the wave of misinformation out there. You've worked hard for your benefits, and you deserve to get every cent you're owed. In closing, February 2026 is clearly a month of significant financial transition and adjustment for every Social Security beneficiary. Whether you are navigating the gap between your early SSI payment and the start of March, or you are trying to balance your budget against the new $202.90 Medicare Part B premium, the key is to stay proactive. Do not let the rumors of a surprise stimulus lead you into a financial trap or make you vulnerable to scammers. Instead, focus on the tangible benefits available right now, such as the 2.8% COLA and the potential tax credits you can claim by filing your 2025 returns this month. Remember, the Social Security Administration and the IRS will never call you to demand personal information or promise secret checks over the phone. Your best defense is a solid plan based on the official dates we've discussed today. Keep a close eye on your bank portal, stay patient with the 3-day processing rule for your deposits, and continue to educate yourself on the programs like the Medicare Savings Program that can help keep more of your hard-earned money in your pocket. This is your life and your financial security. By staying informed, you are taking the most important step toward protecting both. We are entering a period where the landscape of federal benefits is shifting rapidly, but as long as you have the facts, you can navigate these changes successfully. Thank you for spending time with me today to get the real story behind the headlines. Stay safe, stay vigilant, and I will be right here with the next update as soon as the news breaks.